Hey everyone, welcome to another episode of Primary Market Chatter. This is the December second week edition, part two, brought to you by Sunday Investing. So what we had done is that we had done part one of the December second week IPOs, where we had covered one main board, Vishal Megamart, and four SMEs, out of which two have closed: Emerald Tires, Dhanlakshmi Crop, and then two which are closing tomorrow, Jungle Camp and Toss the Coin. If you have missed any of these issues, i.e. Vishal Megamart, etc., the link is in the pinned comments, upper what you can see. So go forward and listen to the companies and on your own leisure at the YouTube link, which is in the pinned comments. Also, you can follow the YouTube channel for any further issues. We keep posting all our videos here. So what the plan for the day is that we'll be talking about two main board companies. साई लाइफ की बात करेंगे और उसके बाद एक और कंपनी जो है वो है मोबीक्विक. उन दोनों की बात करेंगे और दो एसएमईज हैं, सुप्रीम फैसिलिटी मैनेजमेंट एंड पर्पल यूनाइटेड, उनकी बात करेंगे. सो दैट्स गोइंग टू बी द एजेंडा फॉर द डे. वील बी कवरिंग अबाउट फोर कंपनीज. What we'll also be doing is that since it's a busy week with four big size IPOs, main board IPOs, we'll also be talking about what is our strategy for this IPOs and how we are planning to prioritize between these four IPOs. But we'll do that towards the end, so definitely stay tuned till the end. Before we get started, I just want to highlight that we are not SEBI registered. So please do not take anything that we say as a qualified opinion. Definitely look at it with your own leisure, with your own lens, and apply or don't apply issues basis your definitely read the companies and take this only on face value. Do not think of it as a qualified opinion. Second thing, if you haven't followed the subscribed the YouTube channel, the link is in the pinned comments. Go ahead and do that. I'll also post today's episode there tonight, later in the night, where we'll be discussing about Sai Life, Mobikwik, and the two SMEs. With that, maybe let me start with Sai Life and set up Sai Life. That is the first company that we'll be talking about. So Sai Life company researches, develops and manufactures small molecule new chemical entities and offers tailor-made services to biotech firms and global pharma companies. It's in the CDMO space. Talking about the company IPO details, the company is coming with an IPO of 3,000 crores. 3,042 crores to be specific, out of which around 2,100 crores is fresh issue and 950 crores is a OFS. In terms of the market cap, the company is coming at a market cap of 11,000 crores. So quite a decent valuation, like $1.5 billion. In terms of the financials, the company posted a revenue of 1,500 crores in FY24 and a PAT of 82 CR. But this is not one of those companies which you value at a PAT level. Maybe we'll talk about that as well. The LMs of the company are Kotak, Jefferies, Morgan Stanley, and IIFL. Having set up Sai Life, maybe Tanmay, do you want to go ahead and share your read of Sai Life Sciences?
Is my voice clear?
Yes.
So Sai Life Sciences Limited is a fully integrated contract research, development and manufacturing organization. We commonly term it as CRDMO. Okay, I'll just correct that. It is not a CDMO player like other listed companies like InnovaCapTab or Akums or a Windlass kind of. It's a CRDMO, which is like a Syngene. So this company provides end-to-end services across the services which is like drug discovery, development, manufacturing, and it provides the complete supply chain for small molecule new chemical entities, global biotech pharma companies and the innovators. So this company caters to 250 plus global innovator pharma companies, which includes 18 of the top 25 global pharma companies. Okay. So this is the Sai Life is also India's fastest growing CRDMO based on the revenue CAGR from FY22 to FY24. The company is raising 3,043 crores, out of which 950 crores is going to be the primary raise or the fresh raise, and the rest 2,083 crores will be an OFS. In the fresh proceeds, the company will repay the debt of 720 crores, and the rest 230 crores will be kept for general corporate purposes. The OFS is done by private equity funds, and the rest is done by the promoters which includes TPG Asia and HBG Asia. I'll come on its financials now. In FY23, the company did a revenue of 1,217 crores, which was a 40% revenue growth from FY22, and the PAT was just 10 crores. In FY24, the revenue jumped to 1465 crores, which is like roughly 20.5% growth, and the PAT was 82.8 crores. But the EBITDA margin jumped from 15 to 20%. And in H1, the revenue was 675 crores, and the PAT was 28 crores. Now, one will say, कि यार H1 में तो यार पूरा गिर गया and revenue growth also looking like just 5% kind of. But I just saw कि इसका H1 of FY24 कैसा था. So this company delivered actually a net loss of 12 crores in H1 of last financial year. And the company overall posted like 83 crores round figure PAT, matlab roughly 95 crores in H2. And the revenue was, I think, roughly 50%, 40 to 50% more than H1. Matlab, this is roughly a 60-40 or 65-35 kind of a business where H2 is much stronger. So I think I did some very rough calculations. I feel just the H1 should be roughly kind of 1100 crores and PAT could be roughly 120-130 crores. The combined in the whole year, it is roughly 1780, 1800 crores and PAT should be roughly 150, 160 odd crores. I'll come on the valuations. So the company is being offered a valuation of roughly 11,400 crores. See, now first of all, there are three different peers given in the RHP. One is Divi's Lab, one is Suven Pharma, one is Syngene International. I'll just take the cases of Suven and Divi's, that why it shouldn't get compared with Sai Life. First of all, Divi generates majority revenue from the API discovery and API manufacturing. Okay, and the scale of that business and the fundamentals are extremely different, and it trades at very premium valuations from last 20 years kind of. And Suven is trading at an extremely higher valuation. The reason being is its private equity partner is going to merge one more of its portfolio company, which is roughly like half of a size or almost 60% of size of Suven, and it is going to merge. And Suven also took over a company, I think, last week. So overall, so the Suven's valuations are extremely high, and even Suven cannot be compared on Sai Life. I think roughly 10-20% the business is similar. So the exact peer you can get is Syngene International. Okay, Syngene also does I think 60 to 70% of Sai Life's business is like common. The common issuances is done in the Syngene International. I'll just come on its valuation. First of all, don't value this company on PE basis because the business has a lot of operating leverage, and Sai Life Sciences is a kind of innovator focused company. So its molecular portfolio is a bit younger one, which has a good room to pick up, especially in the US and the Europe markets. So I just saw some of its molecules are just like 2022, 2023, but they have a TAM of $1 billion, $1.5 billion, or $500 million. So, and they're just catering like $5-10 billion. So the TAM is extremely huge, and it has enough room to grow. So I'll compare this on the EV/EBITDA multiple. Okay. So Syngene is trading 32 times EV/EBITDA FY24. Okay. FY25 expected earnings, it's trading at roughly 28 times, and FY26 it's trading at roughly 23 times. And Sai is coming at 36 times FY24, 26 times FY25 expected EV/EBITDA, and 20 times, 19-20 times FY26. You can just see that the valuation scope, if you could just go by the maths, it looks like 10-15%. But to be very honest, Sai is an end-to-end player, and I think it is the only Indian player which also has an end-to-end drug discovery chain, which it provides to the innovators. I think Syngene doesn't have that complete capabilities, end-to-end capabilities, but Sai has that from like drug discovery to the manufacturing. It does everything, and it doesn't require any third-party company to manage its operations or smoothen its operations. You can compare this Sai with like China's Wuxi Pharma kind of, which is world's largest CRDMO. So it has that level of capability here. It has a solid facility in Manchester. It has very global and high-tech operations with extremely what we can say global technology kind of things. So I feel this company can easily get a 20-30% premium to Syngene, and honestly, the revenue growth projected and what we can say the pipeline Sai Life Sciences has, it can surely beat these numbers, and even the multiples given could be much higher. So what I personally feel, see, first of all, promoters are very good. Mr. Kanumuri, like very good person. Uh, I think two, three negatives in this company. The first one is like they were expected to sell the company, like they were going to the promoters and the private equity fund was expected to sell the whole company to a different private equity player at roughly 900 millions to $1 billion valuation. And now they're coming at a IPO valuation of roughly 1.3, $1.4 billion. I think ये 30% किस चीज का प्रीमियम ले रहे हैं? First of all, that I couldn't understood. I understand. So the second is like promoter holding 42% का 35.2% आ जाएगा. So that is a small negative. कि it's not a startup kind of business that requires very huge dilution. But I understand कि if the company has good future prospects to grow, even 35% promoters are poised to grow their money in the very long term at a very good level. So what I feel is this company can easily get a 28 times EBITDA or 28 times. And I see like I won't say that the company the valuations are like exorbitant kind of, but doesn't leave enough table on the listing gains. But yes, I'll not be surprised if it lists at a I think a small to decent 15-20%. I'm not saying it can happen or not. I'm not saying it will list at that levels, but yes, it is possible. It's not an out of the box thing. If it lists at 15-20%, I'll not be surprised. It's a very good quality company यार. थोड़ा 10% और वैल्यूशन सस्ता रख देते तो शायद और ज्यादा अच्छा लगता. But yes, like I am seeing its FY26 projections kind of like I think the company should do very well, and I think it's a kind of a portfolio stack like stock like which investors like to keep stock for like 2 years, 3 years, or even 1.5. That this company perfects in that what we can say that style of investing. And yes, sir, this CRDMO is a very, I think, new, I won't say new, but it's going to be a booming sector in India coming. Chances are rare to get listing gains, but we should not rule out that it can not, we should not say that it cannot list at minimum. It will list. How much it will list, that is a question mark. But I see this like company doubling its stock price in like next 2.5 years. So it's an easy doubler from here.
Got it. Thanks, Tanmay, for your review. Couple of questions. So, like one question, how do you value a company like this? Like what metric do you look at? And B, if it is going to be a company which you would be like, which would probably not give that much of a listing pop and is a long-term stock, why not look at some of the listed players which are already listed and have a slight more track record? Because again, IPOs are one-way priced, right? So, do you think it makes sense to wait it out and see where it lists, or do you think you would apply for the IPO?
So I think there are two, three different aspects to this. First, like Sai Life Sciences, what capabilities this company has is, I think we are seeing a lot of huge-sized pharma companies or even like a player like Syngene. But the thing is like, you just see first of all the growth. Syngene is like 14-16% kind of. This can deliver 25% CAGR growth for even next 5 years. For next 3 years, I'm sure it will do, but even for next 5 years, it can deliver that kind of growth. And if you just see at 25% say you just match and do the compounding, the business is going to double in next 3 years, or even very conservative in 4 years, it will double. And the operating leverage which kicks in makes its at valuations very attractive going forward. मतलब, the capabilities are extremely strong. First thing. The second is like their clientele. See, these companies never share their clientele due to their confidentiality clauses signed by the from the their clientele. So we are not going to get what clients it give, but yes, it's very easy to understand. Like it serves 18 of the world's top 25 pharma companies. So I think the clientele at the macro level seems very good. The capabilities are very good. I like the management. It has a touch of the private equity investors, which says that the corporate governance is surely going to be good. I heard the interviews, found that the management is confident, and even saying that the question was asked that your EBITDA margin has increased from 15 to 20% in FY24. They said that indirectly they said it can even improve from here. And this is a H2 kind of business. You cannot look at H1. And I feel Q3 and Q4 should be very kind of blockbuster numbers. And see, what about listed peers? See, India is going to see this CRDMO or CDMO even boom, where the companies are catering to the biotech or innovator kind of pharma companies, and the complete scale of operations is going to shift from China or the related countries to like India or the rest of the world, South Asian countries. So I feel this whole space can come into limelight and should be a very what you can say hot sector for like next 3 to 5 years. And one more thing I'll share, the anchor book was extremely good, very top class anchors. And if I see the anchor demand or the level of craze between institutions it has, I personally feel I can be wrong here, but I feel the anchor book demand of Sai Life Sciences was even more than Vishal. I think very like we can say that demand seems very strong. It's an institutional kind of a stock, and institutions don't want retailers to make money, and the rest stories. And the real money is made in institutional level stocks only, and not in the retailer driven stocks. So I find this company extremely interesting, and I'm sure that 90% of the listeners are going to ignore this company post listing. So for me, I'll surely apply. How much I'll apply? That's the question, but I'm going to apply it. But I have a good risk appetite out of it, so I can see the negative, but I don't feel it is going to list at negative.
Got it. With that, Rohit, do you have anything to add on Sai Life Sciences, or we can probably move forward?
Nothing to add. I was also waiting for Tanmay's review, and I'm glad he's saying it's going to apply. So I think my maths will also change now a little bit.
Got it. So maybe with that, since we already spoke about the anchor book's good. Any big names that you saw, Tanmay and Sai Life? I understand you were saying that there were a few names which stood out, right? And
Actually, sir,
so,
few names are very interesting, but like that sometimes I'm not comfortable with sharing those anchors name. So I think I found it very interesting, and I like it was honestly a blockbuster, a solid kind of an anchor book. People don't understand the anchor book, but yes, for me it was a very good one.
got it. So we have covered Sai Life Sciences. Maybe we can talk about what we are planning to do. I'm also planning to apply for this issue. I will have limited funds, so I'll probably put SHNI in this. But yeah, we can come back to this format for this discussion as well towards the end, and then probably move towards the second big IPO which is coming, which is Mobikwik. Just setting up Mobikwik, the company is a fintech company providing prepaid digital wallet and online payment services. The company has 161 million registered users, i.e. 16 CR registered users, and has enabled 4.26 million merchants, i.e. 42 lakh million merchants, to make and accept payments both online and offline. In terms of the IPO details, the company is coming up with an IPO all fresh issue of around 572 CR, at a market cap of 2296 crore, which is really reduced compared to the last valuation at which the company had raised funds, and the last valuation it was trading in unlisted markets. So that is a slight surprise for people in terms of the valuation at which company has brought its IPO. In terms of the FY24 financials, the company is coming up with a revenue of 890 CR and has done a PAT of 14 CR through FY24. And then I saw that the first quarter it has again turned PAT negative per se. The LMs for the company is SBI Capital and DAM Capital. So with that, Rohit, do you want to go ahead and talk about MobiKwik?
Thanks, Manish. So yeah, I'll cover Mobikwik. As Manish said, this is a 570 crore issue. This is a completely fresh issue. So there is no investor selling, which I think is a good sort of point. Maybe I'll cover that later. So Mobikwik itself it's effectively a platform like a Paytm or a PhonePe that you guys would have all used. It's possible that you might have used Mobikwik as well. It's essentially a two-sided payments network. They use payments as the hook to acquire customers and to get people to keep, using again and again, whether it is UPI payments, wallet payments, bill payments, etc. But ultimately, the amount of, while your payment GMV can be very high, your take rate and that will be a few bips. That is, less than, it'll be probably half a basis, 0.5% or 0.6%, something like that. What they finally do is they cross-sell financial products. This could be credit products, it could be insurance products, it could be gold loans, it could be FDs. In fact, there are so many, it's a kitchdi, and I'm definitely not going to be able to cover all of it, but this is the typical model where you acquire them for one use case, which is a very high repeat kind of use case, and use those eyeballs to cross-sell financial products. One of the key things here is, I think, credit, which is, I think, the play that they're also going for, which is India's overall a very credit underserved market. And for them focusing on this, like you can say that the first 100 million customer, the top tier 100 million customers in India are fairly well served by credit. Like say 50 million Indians have credit cards. So they already are well served. The next 50 million also do get some kind of loans, personal loans and so on. But the next 300, 400 million is where that credit gap exists. And that is what they are saying they kind of want to focus on. And they have different products. They have like a BNPL product. They have an EMI product. They provide advances to merchants and so on and so forth. If you look at last year, about 35% of their revenue was from payments and 65% was from financial services. And their financial services, which is basically that cross-sell, is what has grown dramatically. So if you look at the payments revenue for the last 3 years, it actually hasn't moved. In fact, it has dipped. But their financial services revenue has grown from 100 crore 3 years ago to 550 plus crore in FY24. The way to look at this is they have acquired, over years, they have acquired consumers. Obviously, when the sort of funding winter happened 2-3 years ago, they also had to figure out monetization. And one thing they've done very well is monetize these sort of existing customers that they have. The question is, are they continue to grow that customer base? Because monetization generally tends to have a cap. After some time, there's only so much you can juice a single customer. But for now, whatever they're doing, it's working well. Their focus, like I said, is that middle and low income segment in that tier 2, 3, 4 India. In fact, about 70% of the loans that they disperse through their platform is to tier 3 city customers. So it's again, I would say that is sort of the niche that they have picked, and that's the sort of white space. It is also, of course, the riskiest sort of market. They also have one thing that I like is they acquire their customers for fairly cheap. Their CAC is only about 30 rupees per customer, which allows them to, I'd say, very efficiently acquire the customers that they've done, and then, of course, eventually cross-sell through other things. They are currently the third largest wallet by customer base and the second largest by volume. I was quite surprised to see the wallet numbers. I personally always had a thesis that wallets would get completely killed by UPI. But, these guys have thrived. So it's a good sort of counter example to, how the market actually works eventually. The other thing that I liked was again, it's a good and a bad, but they're very good at creating innovative new products. You can see that they launched this thing called Pocket UPI around the same time as UPI Lite went, which is a slightly different flavor of UPI Lite, but allows you to load money into a wallet and then pay, on any UPI, this thing. So you don't have to keep entering that PIN and, have that, it'll work offline, for example, and so on. They have launched a BNPL program. They are launching an FD-backed credit card. Again, it's very good for that customer base, for which it's very difficult to give an unsecured loan, but you can give an FD-backed loan because, again, it then becomes secured. So they're doing a lot of interesting sort of things. I would urge you guys to just go through the RSP once when you get a chance, because the number of things they're doing is just too much for me to cover, on this in like, say, 2 or 3 minutes. Their numbers are very impressive. If you look at it from the surface, they're actually very good. They've done 80 crore last year. That was a 50-60% growth from year on year. Even in Q1 this year, they've done 350 crore revenue, which was again a 50-60% growth over Q1 of last year. So the business, they've really figured out monetization. I guess when a company has to survive, they sort of pull all the stops to make sure that they're able to grow and survive in that situation. That's something that, they've proven to be extremely resilient, in the face of all the challenges that they had, a couple of years ago. And the interesting thing is they've really seen a growth acceleration now, in the last year and a half. So that's again, very, very interesting. And the management is also very confident about maintaining this 50-60% growth rate. One point is they were profitable last year, but this year there's a slight negative, but that much upar niche tends to happen when it's a platform business. You can't look at it on a Q-on-Q basis. They've also taken some debt, which added some debt cost, but yeah, EBITDA was also slightly lower. But honestly, I find it very impressive. If you compare it with the one peer that they have, which is Paytm, who's nowhere close to profitability, what these guys have achieved by being very frugal is actually very impressive and very commendable, while also maintaining the sort of growth rate that they are. I think as Manish was saying, their last round was done at a much higher valuation. They did a private round, I think, with Abu Dhabi Investment Authority, which was done at a 5,000 crore valuation. This IPO is coming at 2,200 crores. So there's actually a huge discount. Even if you compare it, I mean, Paytm is of course, Paytm is bigger, and maybe they offer even more things, but it is a very fair sort of peer to compare with. this company, Mobikwik, is coming at a 2.5x sales multiple on FY24. And if you annualize what they're doing in Q1, it's coming at about 1.5, 1.6 times sales. Whereas if you do the same annualization for Q1 numbers for Paytm, and Paytm had to have a dip in, or had a dip in the numbers because of all the regulatory headwinds and some of the business lines that they had to cut down. But if you annualize Q1 numbers for Paytm is at almost 9 or 10x sales. So there's like a massive difference between where Paytm is at and where Mobikwik is at. The anchor book is also really good for a 500 crore issue. You had Quant, you had 3P, you had Morgan Stanley, and you had Not Just Bank, which I've not seen in a small 500 crore size issue before. So, and apart from that, they have a bunch of the usual good mutual funds. Now, the risks here, there are two things. One is regulation is a big risk, especially in unsecured credit, which is the biggest thing that they do with their BNPL product, with their EMI product. And unsecured lending has, it's going through a terrible time over the last, 2 years, 1.5 years. While these guys are not directly at risk because they don't participate in the risk, they, ultimately just pass it on to a lender. If the lenders go bust, these guys won't have anything. So that is one risk. I think that is the reason why Paytm also got devalued so much. I would say that Paytm is coming out of that from a valuation standpoint. You can see that Paytm has rallied, it's almost doubled in the last few months. So I feel that should still be okay. But I think for long-term investors, just make sure you understand the regulatory risk behind a business like this. This is ultimately a platform business, and I think it will be valued like this. But in my view, again, this kind of eyeballs business, I still feel that UPI was the game changer. UPI has been won by Google Pay and Phone Pay. Even Paytm is struggling at number 3. And that was maybe partly because of Paytm. So where does Mobikwik stand as the third, fourth, fifth player, given that UPI is this all-encompassing sort of beast? Again, that is a bit of a question for me. These guys are like that, fourth or fifth place cockroach that is just somehow surviving and has actually done very well given the constraints that they have. So I'd like to give them the benefit of doubt and say that they can continue to grow. But for me, these are the two risks. I think from a valuation standpoint, they've left a lot on the table. If you just go on a sales multiple, it's like a 70-80% discount. Even if it doesn't get if it obviously doesn't get the same multiple as a Paytm, I think this business will give a very decent listing gain. And if it lists as per GMP, I feel there is even more upside from there as well. So maybe something to consider on listing too. So that is the short-term view. I think long-term, I think everyone will have their own risk profile because this business is a very regulatory heavy kind of business. But in my view, quite an interesting business. When I first saw this business, I was quite intuitively, I was very negative, thinking this company, seen it for the last 10 years and it has not managed to do much. But looking at how they've sort of turned things around the last year and a half, 2 years, I feel this is a good, strong apply.
Got it. Thanks. Rohit, maybe first question, and this is something which you would have considered and would come up is, how do you see the future of Mobikwik? I'll tell you again, intuitively, it just didn't seem like I had used Mobikwik probably before UPI. Once UPI came in, I remember Mobikwik used to stand by back in the day when we had some coupon codes and all of those days of the world where you used to make some recharges and Mobikwik will give you like $5 cashback or something like that. That's the time when I had used Mobikwik, but then essentially when wallets went out of where Paytm renovated, I never saw Mobikwik renovate itself, or essentially that's when I lost touch with Mobikwik. So how do you look at the Mobikwik right now? And then probably if this business has to go away probably in like, let's say 2 to 3 years or 5 years, 7 years, 8 years down the line, isn't that a big risk on the company? And one more thing which I would want to highlight is, again, unverified. I've read in the comments that Mobikwik probably is the only one wallet which allows INR deposits into crypto exchanges. That's why during the crypto boom, it did very well. But the future is questionable. So anything on those lines per se?
Okay, I'll just say upfront, I have no idea about the last point. I am not aware of, there's nothing in the RHP that breaks it down by this and can validate whether the crypto boom led to the rise in revenue. I don't think so. Just looking at how, like say their credit has, say the GMV of credit that they provide has increased. in line with the increase in their financial services revenue. There are other different aspects, of their business which have also grown. So I find that is probably an oversimplification of what is happening. And crypto has gone through its cycles, whereas this company over the last 3-4 years has consistently grown. So I don't think I would be very surprised if that was true. On the first one, I think I kind of mentioned this also, that this business is, for the short term, I think the market will value it because market likes platform businesses. But whether this company has a right to exist as the fourth or fifth player in this segment, I am also a little doubtful. That, in fact, I feel that the winners are Google Pay, Phone Pay. They are the ones who are going to, and Google Pay has a very premium positioning, Phone Pay has a very mass positioning, and they both perfectly straddle the market. And Paytm is sort of doing everything it can to survive, but Paytm is still way, way larger. So the only explanation I had, and I try to look at the numbers also, is these guys are trying to focus on a very different market. So we don't use PhonePe, maybe because we are still slightly urban customers. So not PhonePe, Mobikwik will be still slightly urban customers. But if you just look at their customer growth, if you look at their transacting users, that's a good metric where you have decent, at least their people are paying on using the Mobikwik app or the Mobikwik wallet or whatever that is. That number has actually grown quite healthily. And if you see that number in Q1, that was 60 million, which is a very large sum. So you can't say that the company has ceased to exist. If you look at Paytm, that number is 350 million. So it's obviously 4 or 5 times larger. But I would have expected that if this company was going to die, this number would have been declining. So they're doing something, they're going after a market maybe that we don't directly see and we don't directly interact with. I agree with you, when it started, Mobikwik was one of the options I could have used to pay on say a Swiggy or whatever that is. But today, maybe their target market is more the tier 2, tier 3, tier 4 city. And they have found a bit of a niche over there, and they are trying their best to sort of hang on and create some value for a very sort of unique user base or a niche user base. So it's just that the risk reward at the valuation that they're coming is quite favorable. I'm honestly personally not sure they will survive 4 years, 5 years, but in the short term, I don't know. I feel that there is enough value that the market will take it to a certain level, then let the company execute. The numbers are good. The turnaround has been really good over the last 3 years. People who want to hold long term can track it on a quarter-on-quarter basis. So again, like I said, initially I was very negative. I am not negative right now. I feel for short term it will do well. Then you have to keep an eye on this business. And I have my doubts on Paytm surviving. And the company's done really well in the last 2-3 months, you can say. So we'll see. Market is valuing, if it's valuing a Paytm, I think they will give some value to a Mobikwik as well.
Got it. One more question before I go to Tanmay. So, how do you value this, considering, let's say, easy peer is Paytm, but then Paytm has so much cash on its books that going concern becomes slightly opaque. Like with this company, I would always want to keep that going concern risk in mind versus a Paytm, which although is a lot more bigger in market cap, but also because it is holding so much cash that you just give it the benefit of saying that, hey, they will figure it out for sure. So how do you keep that angle when you are trying to compare the valuations? And sorry
See,
if
the
I'm
thing
asking
is,
you slightly tougher questions because I have studied this company, unlike Sai Life, where I had absolutely no idea.
Yeah, I think the main thing here is this company is profitable at the end of the day. See, what unlike a Paytm, which needs the money, and you can see that in all the small metrics. If you look at the employee cost of Paytm compared to this as a percentage of sales, I think the employee cost of Paytm is 3 or 4x. I think it's some 50% of their revenue is just employee cost. Whereas these guys are managing with 10, 15, I can remember the exact number, 11, 12%, something like that. They've managed to sustain and build in fintech, it's very hard to build a profitable, sustainable business when you're a platform business and trying to grow and trying to scale. Cash burn is just part of, it's almost like part of life. But they've actually managed to do that. So I would say going concern, if say regulation suddenly comes in, again, there's another wave of regulations that hampers their growth, hampers their revenue, then they're going to be in serious trouble. But as long as there isn't anything big, I think a lot of the axe has fallen over the last 1-2 years. I don't see anything major new happening on this front. They have managed to build it in a cash conservative sort of way. I don't think cash is that important. They're obviously raising 500-600 crore now, which will help them with a lot of the other things that they're trying to do. So in my view, it is not as important given that they've proven a track record of going with no cash burn for the last, let's say, 1.5 years. So they've crossed that threshold. Their operating leverage has started kicking in. So I don't think that should be a big problem. As long as they maintain sort of cash neutral, it should be okay. So I'm not too stressed about that. I think the valuation, honestly, the only metric you can use is you can use a EV by revenue, that is price to sales, where I said, for this year, they're about 1.5, 1.6x, while Paytm is at 9, 10x. You can do all sorts of other things. You can do price to transacting users, price to maybe GMV, and a bunch of other things, but simplest is revenue. And there is a value left on the table, which is safe to say that, what exactly it will give, I don't know, but safe to say that it will not trade at 1.5 times. It will be higher than that for sure.
Got it. With that, maybe I'll go to Tanmay. Before that, just want to highlight, I am not planning to apply to this IPO, not because I'm superly against the IPO as such, but it's just such a hot IPO and such a small size IPO that I want all the way to apply in that IPO so that I can probably concentrate safely on Sai and Vishal. With that, maybe Tanmay, do you have anything to cover on Mobikwik?
Honestly, actually, I have a lot of doubts on it. My first, give me a minute, I'll come with the data.
ये प्रॉपर मोबीक्विक सेशन बन गया जहाँ पे हम मोबीक्विक के डाउट्स फायर करेंगे towards Rohit.
So see, this company recorded in its P&L recorded an expense for the payment gateway cost for complete year FY22. It was 202 crores, okay. But Q1 में ही 128 crores हो जाता है. तो how does the accounting is happening? Like पूरे साल का ये एक साथ ले रहे हैं या फिर ये पूरे साल का 500 crore हो जाएगा? So how this accounting they are doing? Like there is no, what we can say, there is a specific word, I'm not able to remember that, but the distribution is not looking good. Like 202 for complete year, and then they are just doing 128 for a single quarter. How they are booking that expense?
I think the payment GMV, you're talking about FY24 versus Q1?
No. Complete FY24 was 202 crores in the P&L expense for this payment gateway charges, okay?
Correct.
And just in Q1, it's 128 crores.
There the payment revenue itself has gone up by that much. If you see their Q1 payment revenue, it was 170 odd crore, while I think last year, full year, it was 300 crore, 320, 350, something like that. Basically, what they did in Q1 in payment revenue is 50% of what they did the full year. So there is a growth in revenue, and there's the cost is a direct cost. Payment gateway cost is just the cost. It's a direct cost. Imagine you make, say, 0.7% of the transaction. Of that 0.5%, you'll pay as the cost to whatever the TSPs that come in the way and whatever technology partners are there in the middle, and to the banks, you will pay a certain percent. So it's a direct proportion of the revenue that they've done. So revenue has also grown in that proportion.
Okay, means if this company is doing like whole year 1300 crores revenue, then roughly 500 to 550 crores, their expense is just going to be that payment gateway. Am I getting it right?
Absolutely.
I have one more doubt. In this, I'm just sharing the capital structure. In January 23, they raised some money from Blacksoil Capital at 132. It was complete cash consideration. But in December 23, they asked for the payment of call, okay? And Blacksoil Capital didn't pay the call and the shares were forfeited. And in March or April, they raised 50 crore debt at 16.5% from Blacksoil. What does this say? Like first you raised at 1132, then that face value got split. That's a different point. Then you tried to raise from similar investors. He didn't pay the call. His shares got cancelled. And the third time they are raising debt at 16.5%. So I don't understand that. First of all, 16.5% debt to a hotel company को भी 15.5 में मिल जाता है. So is this company's financial health that bad that it has to raise 16.5%? And one more was like they raised 10 crores for working capital in January. Like, come on, 10 crores is not such a large company can raise. Just that too for working capital. So any clarification on that point?
So on the working capital one, honestly, 10 crore I have not even noticed. But on the Blacksoil point, again, I've not looked at Blacksoil separately, but generally they follow a venture debt concept. So venture debt is very common in venture funded businesses. So this is a little different from regular debt. This will be given to, say, unprofitable companies which will not get a typical bank debt, Like even if you go to Paytm, it won't get a bank debt. Just the way, like, somebody like this, maybe I don't know, like a Sai Life Sciences might get. Venture debt works where your debt is a combination of both that is debt as well as equity. And the typical rate is a lot higher. Your venture debt will typically come at 14, 15, 16%. I'm saying this because I have also raised or considered raising venture debt for my startup. It will come at 14, 15, 16% equity. And there'll be a part of that debt which can also be converted to equity depending on the situation. So for example, it can be converted to equity at an exit event. It can be converted to equity when there is a future fundraising round. My sense from what you're saying is that is the call that would have happened when maybe the subsequent round of funding happened. And it is a consideration. So a small part of that debt will get converted to equity, and it's an option. So Blacksoil is a well-known venture debt provider. So my sense is
actually,
this was structured like that.
The thing was absolutely, what you can say, reversed. What we see is like, पहले debt होता है, then first round and then second round. इसमें पूरा उल्टा है. पहले एक round हुआ, then second round में the company asked call money to Blackstone. They said we will not pay, so their shares got forfeited. The third time, after 3-4 months, 5 months, they raised at 6.5%. That was 50 crores. So like थोड़ा सा complicated नहीं लग रहा, like normal startups, sir. I'm not from that world of startups, but yes, like normal startups तो मैंने भी देखे. तो थोड़ा सा मेरे को reverse लगा, like ऐसे कैसे हो सकता है? तो पूरा उल्टा होना चाहिए था. If that theory works.
नहीं, so it is always in this order only. You first raise debt, and then the debt can convert to equity in the future.
No. In this first case, they have raised equity. Then first they have raised equity. Then they tried for second equity round. Blackstone didn't pay the call. The shares got forfeited. And the third time after 5 months, they raised their debt. That has happened. That is only what I'm trying to highlight. Yes, all are Blackstone Capital Private Limited. Names are same.
Okay, I'll check that. But that sounds, I don't know. I don't know the reason. It might have been.
No, the article is you just search Blacksoil and Mobikwik, you will get a complete article, and Capital Success Quote I'll send you.
I'll have a look. But again, there's no, when did this happen? Tell me when this happened.
See, first equity raise was in January 16, 2023. Okay, from Blacksoil India Private Limited. The second equity was tried to be done in 20th December 23 from Blacksoil, where the shares were forfeited due to non-payment of call, which is specifically given there. And give me a minute. And the third, that debt was raised in March of 24, 50 crores from Blacksoil Capital.
So if Blacksoil has given the debt, wouldn't the
debt पहले कभी नहीं लिया है. सबसे पहले equity was, then one more equity which was forfeited. The third time was the debt. So it is completely reversed than the normal one.
It is strange, but I'll try and see if I can. Just send me the article. Let me have a look if I can understand it.
This is article is like completely our Google पे 10 articles पड़े हैं. That's not a big deal. And RSPL, so I'll share the page number. It's 124.
Again, yeah, Tanmay, see, for stuff like this now, when things happened 1.5 years ago, when the market is in a very different situation, it's up to each investor to read whether he takes too much. Like, I know how difficult it was for fintechs to raise money in 2023. And I know the kind of term sheets that have been pulled from, say, small startups that were on the verge of raising a 5 million, 10 million round in the fintech space. So things like this keep happening. You can't always look at what happened 1.5, 2 years ago without context of where the business was, where the market was that time. People keep removing term sheets. People keep removing, like when you're in front of the screen, you keep removing orders. You're about to place an order to buy a share and you remove it. That doesn't mean anything. So there may be something you can read and you can try and figure out exactly. But I think generally the market moves on. I will try and find out this specific case if there is a reason why they did not honor that call. It seems like mostly it could be just the funding environment. It could be the valuation at that time. They would have been unhappy because the market suddenly tanked. I've seen this so many times. Term sheets will change. You will shake your hand on a term sheet. 2 months later or 1 month later, term sheet will get cancelled because the funding environment is very different 1 month later because the market has fallen. It has nothing to do with the company. It has to do with what the market perceives at that point in time. So again, read it as you will. But I'm not too keen on looking at stuff that happened 1.5, 2 years ago. It's not a sign of, there's no need to look at it as sign of malpractice or, some
No, I'm not looking at
whatever.
that.
Yeah,
See, we are actually new to that startup world, so I just thought, yeah, as a reverse, because that basic theory I too knew, but like it was like for me a very different kind of, because that similar things I've seen in two, three more startups, but this was a bit a reverse for me, so I thought I'll just go and ask.
I'll also have a look. Anyway, I don't think I'll be able to cover it now in this space, but at least one-on-one we can figure. I can tell you what I think once I read it, Aramse on the side.
Uh, One more was, it was not a doubt kind of thing, but just like a general perception कि इसका जो EBITDA था FY24 whole year was 4.2% EBITDA margin. It fell to
Correct.
0.6% in Q1. So ये पूरे साल का कुछ ऑपरेटिंग लेवरेज ऐसा कुछ होता है क्या कि पूरे साल में वो बिल्डअप हो जाता है या फिर इट्स एक्चुअली अ डिप? What, how can we interpret this? Because the what you can say, the share of each business and the like multiple things they're trying to do, वो थोड़ा सा वो revenue share bifurcation बहुत ज्यादा what you can say change हो चुका है, dynamic हो चुका है, so we cannot judge how the things could go forward, because I'm just saying कि if that payment gateway payment cost is like annualized on that according to the revenue, this company can make like approx 50 crores net loss of 20 crores PAT in FY25, which is like nothing. So I'm just trying to
Again,
see
yeah,
EBITDA margin
look,
कैसे match हो सकता है.
EBITDA margin, the explanation is that their payment gateway, as a percentage of their overall sales, if you see in Q1, 50% payment, 50% financial services, whereas if you last year's full year, it was 35% payment gateway and 65% financial service. And financial services far higher margins. So that is the simple reason for why the EBITDA has fallen. Whether it is, like now suddenly this is going to be the new payment gateway ka percentage, I don't think so. But there was no clarity. I was also listening to 1-2 interviews to get a sense why did the payment, volume spike so much in Q1. I actually think it's good in that their financial services revenue is dependent on payment services revenue. They have to keep growing that, which means they have to keep acquiring, retaining customers in order to cross-sell financial services. For the last 3 years, the payment services have completely flatlined. In fact, it has degrown, which means that it will be harder and harder for them to sell more financial services because they'll run out of people to sell and run out of what they can sell. If they're able to grow their payment revenue again, which is either through new customers or getting the same customers to come back on the platform more and more, then that is a good sign that their financial services at an absolute level, even if as a percentage is smaller, at an absolute level can keep growing. So I was looking for some clarity from the management on why there was such a sudden spike. But the explanation for the EBITDA is very simple. It is just this. It is that payment revenues became 50-50 in Q1 versus 35-65, and payment has much, much smaller gross margin. It's a very low, value adding kind of business, a very, very thin gross margin and EBITDA profile. And most of the revenue is from financial services. It's just 1 quarter of data. We'll have to see what happens in Q2, Q3, Q4. But the management has given a general guidance that they will maintain this sort of, overall mix and overall growth. And whether Q1 was an aberration, that was not clarified.
Mm-hmm. And I think one more interesting point which I found like real interesting, that they are going to launch their co-branded credit card. What do you see, like how potential that can fetch?
Honestly, not that excited about it. I know co-branded cards do well for big players like say a Flipkart or a Amazon, which have a very unique customer base, and they can charge the co-brand partner a decent amount of money. But from whatever I understand, only the biggest players in the country, which is effectively Flipkart, Amazon, maybe a Swiggy, can actually charge money and get the brand, that's HDFC in this case, or what Axis Bank, or whichever their co-brand partners, to actually pay significantly for acquiring this customer. Others, usually when you do a co-brand, there's some rewards, right? And that rewards will be funded by the brand, which is in this case, say Mobikwik, and the bank at the back. Generally, what I've seen with co-brand cards is smaller partners, which is say a Mobikwik, in my view is a very small partner compared to say the bank that it will work with, will have to also fund, the rewards and fund the acquisition. And there is only so much money they'll get. They don't have a lot of say when it comes to negotiation with the credit card partner. So I don't think it is a game changer of any sort. Generally, small partner co-brand cards are not in the favor of the smaller partner. It's generally in favor of the bank. So it's good. They're basically launching so many different things, trying to see what works, trying to see what sticks. And they've actually not done a bad job. I think co-brand card is one thing. Like I liked the FD backed card that they were launching, which is a completely new product. It's a product that barely exists in India. Whether they will get adoption is different, but it's an innovation. Like for a customer who has no credit score, the moment you have an FD, you have, you've taken away the risk. So you can underwrite to, anyone. You can underwrite to a maid, you can underwrite to a auto driver if the guy is willing to put an FD back because there's no risk. So that's a very interesting product innovation. So that, I don't know if it'll fly, but that's a nice thing they're doing. I think co-brand cards generally work only for very, very large partners. I know this because my wife works in a team at Flipkart that does this. So they have a very, very big partnership with Axis. And the economics of that works very well for Flipkart. It's the one of two revenue lines for Flipkart that actually makes money. But it doesn't work that way for smaller partners, is my understanding.
Do you think the profitability can sustain?
FD backed credit
Last.
हाँ चलो कर लो यार, तुम लोग कर लो, आपस में बढ़िया चल रहा है.
सर प्रॉफिटेबिलिटी पे क्या लग रहा है यार, सस्टेन हो पाएगा? बिकॉज ना व्हाट डेटा आई कुड अंडरस्टैंड लाइक FY26 में शायद दे कुड पोस्ट लाइक 50 crores काइंड ऑफ, बट FY25 seems like nil or 20-30 crores net loss. What earnings I could figure out? Like I sat 1.5 hour, but यार I saw कि ये 20 crore के आसपास यार net loss ही बना रहा है.
Depends. Again, if you take the mix as 50-50, yeah, they will be at slight loss. But I think you have to give it 1 or 2 quarters. Just extrapolating 1 quarter is not right, because honestly, that Q1 ka payments is actually a little unusual compared to what they've done for the entire last year and even the year before that. They have such a high skew towards payments. So given that they are scaling up the other revenue streams, I don't think that mix should stay. Let's watch what happens in Q2. Again, I am personally not that excited for this in the long term. I like this business for a very good short-term play. Platforms are the flavor of the season. This will definitely do well because there is a big valuation gap. Market will look at it. Market will assume that in the future it will do well and give it some valuation that is higher than the valuation, much higher, I think, than the valuation is coming at, just because of the size of the discount. Long term, I feel Paytm, Mobikwik, all of these are going to really struggle. But abhi ke liye, theek hai. So I'm not reading too much into profitability. You can't extrapolate. One thing I say is you can't extrapolate Q1 numbers. You'll have to see if, say, for next 3 quarters is a trend, the suddenly payments GMVs or payment revenue is much, much higher than financial services, then profitability is gone. But if that's not the case, if it's a one-off thing, then 100% they can be profitable, I feel.
Mm-hmm. And I think majority of their investors, like half of their investors have fund like for 4 or 5 years, like 2020 और 21 का investment है. So I'm just worrying कि यार listing के 2-3 महीने बाद कोई बड़ा block deals का series ना चालू हो जाए. So that is a bigger risk, but yes, listing तो बन जाएगा इसमें. Long term prospects like look very doubtful.
Kind of agree, yeah.
इसमें किस बैंक के पास स्टेक है? I think someone has 13%, right? वो कौन था जिस पे 13%?
Bajaj Finance.
Bajaj Finance has 13% of Mobikwik, right?
सर लिस्ट पढ़ूं क्या मैं इन्वेस्टर्स की? लिस्ट बहुत अच्छी है वैसे. इतनी अच्छी लिस्ट है कि लोग बोलेंगे कूद के लगा देंगे.
अगर वो SME होता तो पक्का लगता कि अरे डबल प्राइस में भी डाटा तो अभी तो बनता है.
बताओ क्या पढ़ूं, क्या मैं पढ़ूं?
Exact same thing happened in the SME, right? People said कि 2x पे भी लिया है मैं listed में, तो listed x पे तो बनता है apply करना.
And I think in my 4 or 5 years of journey, like I'm seeing first company which has some best investors like Ashish Kacholia, Vijay Kedia, Anupam Mittal, Shaadi.com के इन सबको यार मस्त मतलब लगा है कंपनी ने बढ़िया सा.
I'm seeing that you are
60% haircut पे बैठे सर, 60% haircut पे बैठे हैं और वो एक हेड शायद कट ही रहेगा.
Got it.
I think the stock was trading actively at like 600ish, no, in the unlisted market.
हाँ, 550 में last month, 550 में last month trade होगा unlisted में. But the thing was like they were expecting कि 700 crore raise at like roughly 3,200-3,400 crore market cap, but they came at a 50% discount. So I feel unlisted was trading कि like यार वो valuation पे आएगा, then it would list like kind of like 50% premium. So that वो ऐसा कुछ calculations कर रहे थे, but I think the calculations are very different now. And I feel कि यार वो जब 500-550 जाएगा इसमें बड़ी वाले bulk deal होने वाले हैं. And I'm sure on that part. So let's see how time goes.
500 आने दो ना, फिर सब पैसा बना के ही जाएंगे. We don't have to live with this company for the rest of our lives.
And I'm very excited to see actually the private equity players like selling a Cisco, even a Cisco kind of a company which is like world's top 100 company owns a very good stake in this. I think roughly कितना है ये? 2.5% own करते हैं. Abu Dhabi, Peak 5, Applied Technologies, Netherlands. यार क्या मतलब बड़े इन्वेस्टर लाए इन्होंने.
Yeah, these guys raised, venture funding from marquee investors. It was one of the hottest companies, I'd say 7, 8, 9 years ago. But the cycle's turn just because they raised money. I don't want to get too much into it, but that's how the market is. And ultimately you have to respect the market and the valuation it gives you. Their bankers have told them to come at this price. They're coming at this price.
Got it. With that, maybe let's just cover on what you guys are planning to do on MobiKwik. I have already mentioned I'm going to skip this company because this is a very small issue and I have better options. But are any of you two planning to apply, or we can probably move forward to the
No.
next issue because we are very, very late?
So I'm also
Uh,
avoiding, and not because the reason is
so
like company
basically,
fat, but allotment नहीं मिलने वाला.
तो
Allotment, I want
बेसिकली
allotment.
अपन
मुझे
ने
कर
40 मिनट ऐसी कंपनी की बात की जिसमें हम तीनों यूनिवर्सली नहीं अप्लाई करने वाले हैं.
यार मैं अप्लाई करूंगा, मैं एसएच नहीं तो अप्लाई करूंगा, बट या
मिलना
मिलने
नहीं है
वाला
वो
तो
अलग बात है.
नहीं. हाँ.
I was
यार,
looking
you
at
have
the
lot of funds we
subscription
don't
today.
have.
Today the subscription was already crazy, right? The subscription had gone all over the place today itself. I can see
जैसे मैं
that
तो
the
सोच रहा था
subscription.
QIB भी आज भर देगा, खत्म पहले दिन पे खत्म कर दो भाई इशू को. वही
वैसे
बाकी रहे,
तेरा
बाकी तो सब आ
तेरा
चुके
लाइफ
हैं.
साइंसेस, साई लाइफ साइंसेस is the highest QIB. I think it's already 2.5 times.
करेक्ट करेक्ट, हो गया पूरा. इट इज डन, लाइक इशू तुम्हारा सेकंड हाफ में खत्म हो, लाइक इट वुड बी सेट.
Yep. This is how environment change, right? Like last week, we were sitting at places where even on last day, we were very unsure of whether companies will sell or not. And now you are here back where companies are getting 7x subscribed on day one just by retail and HNI.
Difference between 10% GMP and 40% GMP.
Yep. 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 With that, maybe we can move forward and just cover two SMEs very quickly. We will do this quickly, but just want to highlight and then come back to just wait for everyone so that we can come back and talk about the three companies, Vishal, MobiKwik, and Sai Life. We'll also do a very small sneak peek of IKS. I understand there were a few people who wanted to know about IKS, and just probably put our priority order between these four, how we are planning to apply. But before we go there, we want to cover up two SMEs very quickly. So moving forward, talking about Supreme Facility Management, the company offers integrated facility management services, including shop services like housekeeping, cleaning, staffing, and hard services such as managing power equipment like generators and UPS services. Talking about the IPO details, it's a 50 CR IPO, all of which is a fresh issue, and the company is coming at a IPO size, market cap of around 188 CR. In terms of the financials, the company's financials are 356 CR top line and 7.5 CR bottom line, and the LM is Khandwala Securities. So talking about Supreme Facility, एक बार Supreme Facility की बात करते हैं. So just a couple of things. This is a disguised this is a fixed price issue disguised as a book build issue, in the sense कि मैं ये बोल रहा हूँ कि इसमें सिर्फ 10% QIB कोटा है, 42.5% रिटेल है, 42.5% HNI है. So since it's 10% QIB, everything 90% of the issue would be available on day one as free float. तो वो जो पॉइंट होता है कि हम फ्री फ्लोट को लाइक QIBs में एंकर्स होते हैं बुक बिल्ड इशू में, वो है नहीं इसमें. सो दिस इज समथिंग विच खंडवाला हैज बीन डूइंग ऑफ लेट. लाइक उनने पिछले जो दो इशू लाए थे बाइक को और आई थिंक वन मोर इशू, उसमें भी सिमिलर स्टोरी थी वेयर दे हैड पुट इन बुक बिल्ड इशू जहां पे वो रेंज भी थी बट उसमें सिर्फ 10% QIB था, और 10% QIB में क्या एंकर नहीं होता. तो एंकर नहीं होता है तो एवरीवन इनफैक्ट 100% कैन सेल, राइट, बिकॉज QIBs कैन ऑल्सो सेल ऑन डे वन. सो इट इज एज गुड एज अ fixed price issue. It's just that it is a book built issue for being a book built issue. So that covers both the phases. Now talking about the company, found it very, 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 very convoluted in terms of like the company is doing everything that it can in terms of ancillary services to any large company or a MNC. So I'll talk about what the group is. So it's a Akudi Pune based कंपनी LV शिंदे ग्रुप करके. उनने काफी पहले सर्विस चालू की थी. जो उनका पहला क्लाइंट था वो टाटा मोटर्स था. तो टाटा मोटर्स में उनने अपनी हाउस मैन पावर दी थी ताकि वो टाटा मोटर्स में यूज हो पाए. एंड देन दे स्टार्टेड डूइंग ऑल द बिजनेसेस इन एंड अराउंड दैट कंपनी. सो प्रोवाइडिंग द मैन पावर, helping with employee transportation and all of those sorts. I'll come to the details as well, but yeah, their clients includes all of those which are in that area of Pune, around Akudi and Nigadi. So clients like Tata Motors, Bajaj Group, Daimler Benz Group, etc. And as I was saying, services, around 60% of services, integrated facilities management. बाय फैसिलिटीज मैनेजमेंट में मैं बताता हूँ क्या क्या आता है. सो इट इंक्लूड सॉफ्ट सर्विसेज लाइक योर हाउस कीपिंग एंड क्लीनिंग सर्विसेज. तो कोई ऑफिस है, उनको अगर हाउस कीपिंग चाहिए, क्लीनिंग के लिए एम्प्लॉयज चाहिए, तो ये लोग उनको अपने पेरोल पे देते हैं वो एम्प्लॉयज. उसके बाद इट इंक्लूड्स डिसइंफेक्टिंग एंड सैनिटाइजिंग सर्विसेज, जो डिसइंफेक्शन वगैरह करना होता है, पेस्ट कंट्रोल वगैरह करना होता है. इट इंक्लूड्स हॉर्टिकल्चर, जो गार्डनिंग वगैरह करने होते हैं लॉन्स वगैरह को, उनकी सर्विसेज. फसाड क्लीनिंग जो करना होता है, जो ऑफिस का फसाड होता है बाहर का, उसको क्लीन करना होता है, वो सर्विसेज देते हैं. उसके अलावा इट इंक्लूड्स हार्ड सर्विसेज लाइक योर मेंटेनेंस, इलेक्ट्रिकल, प्लम्बिंग, मेंटेनेंस ऑफ योर यूपीएस सिस्टम, हीटिंग, वेंटिलेशन, एयर कंडीशनिंग सिस्टम एंड ऑल ऑफ दो सर्विसेज के लिए भी जो एम्प्लॉयज चाहिए होते हैं, जो कॉन्ट्रैक्ट्स होते हैं, वो ये कंपनी देती है. उसके अलावा ये कंपनी, जैसे मैंने बताया, स्टाफिंग सर्विस भी देती है. सो दिस ऑल कम्स अंडर द IFM segment, integrated facilities management segment, which contributes to 60% of the company. और उसके अलावा कंपनी का 20% अराउंड कम्स फ्रॉम एम्प्लॉय ट्रांसपोर्टेशन. बेसिकली दे हैव लाइक 430 buses ऑफ देयर ओन, एंड देन सम 80 to 100 buses which they have rented, 98 buses I think which they have rented, and they use those buses to provide employee transportation to like 150 company clients across Pune. सो वो भी करते हैं. उसके अलावा ये कंपनी जो है और भी बहुत सारे काम करती है, जैसे इट ऑल्सो डज योर सब कुछ तो लिखा है प्रोसेसिंग. बेसिकली क्या होता है कि थर्ड पार्टी प्रोसेसिंग. सो किसी को बॉयलर्स, पैनल्स वगैरह बनाने, या कुछ भी फैक्ट्री में बनाते हैं, तो ये फैक्ट्री इन फैक्ट्री मॉडल बेसिकली अपने यहाँ बना के उनको दे देते हैं. इट्स कॉल्ड प्रोडक्शन सपोर्ट सर्विस, which includes like 3-4% of the business. Then this company also does third party warehousing management, जहाँ पे ये warehouse वगैरह देते हैं. So if I talk about the very high level, 65% of their business comes from your facilities management, जो housekeeping वगैरह हो गया. उसके बाद 20% comes from employee transportation, 4% comes from production support, 3% comes from corporate food solutions, जो food वगैरह देते हैं ये. 6% comes from supply chain management, warehouse वगैरह जो है. सो अ ह्यूज कंपनी, एंड इसके अंदर भी ना 4-5 इनने कंपनी बना रखी है, और दुनिया जमाने का काम जो भी आप सोच सकते हो वो सब ये कंपनी करती है. और इसकी 4-5 जो कंपनीज हैं, किसी के थ्रू वो एक काम कर रहे हैं, किसी के थ्रू दूसरा काम कर रहे हैं, एंड ऑल ऑफ देम आर कमिंग टुगेदर हियर एंड दे हैव अ ह्यूज रेवेन्यू. लाइक आई सॉ द रेवेन्यू साइज वाज लाइक 350 CR a year, which is a huge revenue base, and they've been growing well as well. If I talk about their revenue numbers, they did like, just give me 1 minute, let me go to this. Yeah, in FY22 उन्होंने 236 CR का रेवेन्यू किया था, FY23 में 330 CR का रेवेन्यू किया था, and FY24 में they did 356 CR revenue. So it's a huge group, but somehow the profitability never comes. A lot of it is also because these are doing very low value add support services, right? So which do not have a lot of margin. Plus ये क्या है कि पूरा रेवेन्यू में क्या है, सैलरी जैसे एम्प्लॉय की आती है, तो ये सैलरी देते हैं, कंपनी से चार्ज करते हैं, तो a lot of it is just gets pass on to the employee. So इसलिए प्रॉफिट मार्जिन बहुत ही छोटा सा होता है. अब अगर मैं बात करूं कंपनी के एम्प्लॉयज, तो द कंपनी हैज लाइक 11,000 एम्प्लॉयज. सो इट्स अ ह्यूज ग्रुप, एंड आई वाज लुकिंग एट अ फ्यू वीडियोस ऑफ द कंपनीज की. कंपनी की और भी बहुत सारी चीजें. दे हैव अ विलेज which is called Supreme Village or something like that, where they have just all the kinds of facilities, etc., which doesn't come into this company. By the way, this is a huge company, so there can be some play with respect to that. But other than that, like, the company is raising 50 CR, as I said, right? 30 CR of which is for working capital, and then 7.5 CR is for pursuing some inorganic activities and take acquisition of a few companies. Like अगर मैं कंपनी के trade receivables की बात करूं, तो company has huge trade receivables which have been increasing. In FY22 they had 63 CR of trade receivable, 23 80 CR, 24 99 CR. Currently they have 108 CR. So like, as their revenue has been going up, their trade receivable has been going up, although not a lot of, and nothing is in bad debt, as it's in cycles, right? It keeps coming back. But the problem is कि जब तुम इतने कम मार्जिन पे, 2-3% मार्जिन पे लाइक 2-3 महीने का क्रेडिट दे रहे हो, सो आई डोंट अंडरस्टैंड हाउ डू यू मेक मनी. लाइक कमिंग टू द मार्जिन्स, द कंपनी मेक्स लाइक एट बेस्ट 2%. The company's PAT margin is 2.09% in FY24. They made 7.4 CR on a PAT of 356 CR. So it just doesn't make sense. So with that, maybe talking about the valuation, the company is coming at 188 CR, right? As I said, at 7 CR PAT and a 188 CR market cap, the company is coming at 21 PE, which just seems too high. So going to avoid this company for now, and also the LM is Khandwala, so doesn't make sense. It's just that this is a big group and they have a lot of things happening. So कुछ मेरे को ऐसा लगता है कि there might be some play happening where they might pick up something in inorganic, or acquisition might happen here or there. But I'm definitely not going to look at this company at IPO level, and then probably future if some thing happens and if there is some news, maybe I can look at it at that moment of time. But for now, I'm just going to avoid this company. So that is what my view was for Supreme Facility Management. Uh, Rohit, Tanmay, you guys have anything to add, or we can very quickly move to purple?
Sir, I
Nothing.
think
I
the
agree
LM's
with
track
you.
record, LM's track record is very interesting actually. Last 5 issues: Premium Plast, Phoenix Overseas, Vico, QVC and Euphoria Infotech.
यार मैंने वो लिख
All
रखा
are
था, मैं
trading.
एलएम ट्रैक रिकॉर्ड की बात करने वाला था, पर फिर रोहित ने मेरे को मैसेज कर दिया कि यू हैव बीन स्पीकिंग ऑन दिस फॉर 8 minutes, प्लीज शट अप. इट्स अ सैड इशू टू, बट ही इज गोइंग टू अप्लाई. सो मैंने अवॉइड कर दिया.
All of them are trading almost 50% below issue price. Phoenix Overseas मुझे याद है यार. I was saying avoid, everyone's like applying and it opened bad. Vico, QVC, यार, avoid candidate है. And I think I saw the fundamentals. I think I have not found anything like interesting kind of, nor even
Yeah,
values are also not very good.
honestly, this is not that bad of a company. Baiko Phoenix type ki nahi hai. I do not see. The company is good. It's a huge group. They have business. It seems really just that it's one of those 2% pat margin businesses, which market doesn't seem to like. The market is very jittery कि भाई ये 2% revenue वाले business कभी भी बदल जाएंगे. And plus like 3-3 महीने का credit period देके अगर तुम 2% पे काम कर रहे हो, so I don't
No,
understand
valuation भी
that
सस्ता
kind
नहीं
of
ना.
business.
सस्ता तो नहीं है
Yes.
ये. 15 टाइम पे होता तो बात अलग है. 15-17 टाइम पे.
That I agree. But still, I feel that since the business is real and they can do some inorganic, because I feel that the PAT margin, I don't know, either it is too compressed, because I don't understand how you'll do business at 2% PAT margin when your credit cycle is like 90 days. It just doesn't add up.
The company has a lot of actual debt in the books. In March 24, debt was 70 crores and it has shot up to 94 crores in the first quarter. तो कुछ तो इन्होंने एक तो वर्किंग कैपिटल रेस किया, एक तो लॉन्ग टर्म डेट लिया है. And I think any idea how much cash this company has on books?
I didn't check.
Okay. ठीक है, मतलब यार ओके एवरेज इशू है.
But can be very easily
Manage.
skipped. Yeah, can be very easily skipped and moved on. With that, let me move forward and talk about Purple United and set it up. The company is a fashion brand that designs, develops, sources, markets, and distributes clothing, shoes, and accessories for children of all ages. The company has 17 exclusive brand outlets, and 20 store-in-store locations in popular retail chains. Talking about the IPO details, the company is coming up with an IPO size of 32.8 CR, all of which is fresh issue at a market cap of 121 CR. The FY24 financials for the company were, the company did a revenue of 43 CR and a PAT of 4.8 CR. So it's coming at a valuation of like 24 to 25 PE FY24. The LM for the company is Expert Global. With that, maybe Rohit, do you want to go ahead and talk about Purple United? And let me just say that I have set the clock on you.
I'll be done in 4 minutes, just you see. So Purple United, like you said, is a 33 crore issue. They are a premium kidswear brand. They are trying to play a positioning. If I were to compare with a brand that you guys would know, say something like First Cry, you'll see that the products are maybe 10-15% more expensive. So I wouldn't say it's actual premium, but it's premiumer than say a First Cry. They have, about I think 19 odd retail outlets right now, many shop in shops. They have some online presence as well, but ultimately majority of the revenue actually comes from distribution, which is they will sell it to a distributor who will then sell it on, to whatever and point of sale. So 30% of the business is from their retail stores, 20% is online. This is actually something which is not really scaling up, and 50% is from this B2B. If you look at H1, it is even more skewed to B2B, but my sense is that is mostly because B2B inventory is obviously bought ahead of time, and the main sales happens in this, Q3. Q3 and Q4. And so the B2B will be a little bit front-ended and their B2C channels will show revenue later. So I don't think H1 is super representative, but on an average, they're about 30% retail, 20% online, and 50% B2B. That's still more skewed to B2B at the end of the day. They are, though, raising this money to increase that revenue contribution from retail. Today, 30, they want to take it to 50%. They do have a target to go from this 23 to, I think, I've read two sources. One person saying 33 stores by the end of this year, another saying 40, 45. I'm not sure which is the correct number. But still, they're looking to add 3-4 new stores every month. And they've already in H1 itself shown a significant growth. They've added like 10 new stores in H1 alone. So they've started growing, and with the funds, they should be able to grow their retail presence a lot more. Their margins are also really good. They have like a 55-60% gross margin, which is very, very healthy. First Cry, for the record, has like a 40% gross margin. So that 60% gross margin shows that they are able to charge a bit of a premium for their products. But I kind of view it as probably the product and product quality is quite similar to what you might get on a First Cry, but they're able to charge a little bit more because of that brand, that Purple Unite, whatever little brand they've built in the markets they are in. The numbers are very good. They've grown, they've grown to 42 crore, I think from 20 odd crore to 40 crore in FY24 with about 4.8 crore PAT. H1 alone was 30 crore. And they have, in a couple of places expressly said that they expect to close FY25 at around 78-80 crore with 8.5 crore PAT. H2 is heavy, as much as people joke. It is, no doubt, it is heavy with festive season happening in H2 in India, plus winter wear also being higher ASP. So all that put together, they will do probably 60-65% of their business in H2 itself. One thing is the balance sheet, the receivables are high. This is a function of that B2B business. So they would be providing the stuff on credit. And I think it is very important that they move more and more to their retail model and that online model where the receivables sort of issue will come down. But it's something that they are managing. The business is coming at a 15 times FY25, which I think is actually fairly cheap. Usually these high growth consumer type brands can get much higher multiples. SD Retail also, which had a mix of B2B and B2C. Very similar model in sleepwear. It just came like a month or so ago, trades at 35 times FY25. It actually did nothing. Sleepwear business, they were sleeping for the last month and a half, but suddenly a week ago, it suddenly shot up 30%. And so now it's sitting at 35 times, I would say, FY25. They're also more conservative on growth. If I look at a childcare sort of or childwear peer, there's this company called Iris, which also does a little bit of manufacturing, but they also have a brand called Doremi, and they trade at 45p. The other peers in children's clothing are manufacturers, so I don't want to count them as actual peers, but at least Iris is a close enough peer to what Purple United does. There's one interview I found the promoters very genuine, very passionate. They also had this aggression that they want to get to 500 crores in 5 years. So they are setting a target, and the business so far, at a small scale, it has actually done very well and is growing very nicely. The anchors are okay. There's not the usual SME anchors, a little better than that with Pine Oak, Meru, and Arth. Arth is the B line ka AIF. So better than the normal set of anchors in my view. I frankly do see a decent upside on IPO price. And if the market fancies this stock, it can move up much higher also. Just a warning, there was this other, consumer brand, apparel brand Forecast Studio that came some time back, which also is growing super fast, probably faster than all of these guys, still sort of projecting 100% year-on-year growth. That trades at 20p. That's a very mass position kind of company. Maybe that is the reason the market is not valuing that. Whereas Purple United is trying to position itself as a premium product, and it's definitely more expensive than even what you will get on a First Cry. So SD Retail that way came with a similar premium positioning, so maybe the market will give it a better multiple. But yeah, I feel at IPO price, there is a safe upside. After that, it depends on whether the market fancies. It could be something that just doesn't do anything for some time, and then suddenly one day it will be up 30-40% before you realize it. I think it is worth applying. It's just that you'll have to be careful with funds. It's not a big issue, 33 crore. So allotment may not be easy. I'm not sure if there is a GMP or not for this, but if the GMP comes, then definitely there will be, a huge subscription, and then you probably won't get allotment, and then you will sacrifice maybe a Vishal or something where the allotment is easier. So just take that call. But as such, I did not find any major red flags on this business. It looks quite good and interesting, both to apply and then to see if you want to keep it for long term. Manish, 4 minutes.
Not really, 7.
Hey, 6.
But that's okay. I'll give you that. It's a better company than Supreme, so deserves the deserves more time, if not anything, if not less, per se. But yeah, couple of questions from my end. Anything in terms of the promoter? I understand there was a pre-IPO video also, which was done. And second question, this company was doing the rounds on pre-IPO, and I know because it came to me like from 6, 7 sources. And then, like, I'm not sure, was there any pre-IPO done at what valuation? Anyone interesting, and why did they have like, and anything on LM quality? Because I understand LM is decent, like not the best of the LM. So anything on those lines?
So yeah, on the what is it, the pre-IPO, no major names, as in I didn't see any name that would stand out. On the what was the previous question on the promoter? Promoter, I think I covered it. Looks like good, honest. It's like this couple promoter. The wife takes care of the design, and she is, I think, from a fashion design background. She used to run some fashion institute, and so this is like sort of a passion thing that has become a business for her. The husband is 20-25 years in retail for, and like I think a distributor for Nike and like different kinds of apparels and shoe business. So comes from the background. One person comes from the sourcing and the sort of the product side of thing, and the other one comes from the design and the manufacturing side of things. So it's an interesting sort of mix, and I found them to be a very sort of cute couple, doing their passion, but also doing it well, growing, good, decent team. You can watch it. There's this video from, Vishnu Agarwal, which is a very good video to get an insight into the team and the business. So definitely watch that, because if you are looking to apply or you're looking to invest in this, it'll give you a sense on, how these guys are sort of running the show. But yeah, I didn't find anything concerning about the promoter. I found him quite endearing, actually.
Got it. Again, I would probably skip the issue, because A, there's a GMP, and B, I don't like these retail kind of businesses which are promised to have a huge PE, but then may fail to deliver. I remember I had invested in Focus Family at your suggestion, Rohit. So I'm not going to invest this time. I'm going to skip, but also because there are better issues available. So with that, maybe we can go back and talk about the companies. And first, maybe I'll give it to Tanmay to give a very high level review of Vishal. What is his view? Anything has changed? And then also give a very, very high level 1 minute review of IKS, and then we can talk about the priorities. Before that, just want to highlight, अगर आपने बीच में ज्वाइन किया है तो ऊपर YouTube चैनल का लिंक है, उस पे आप जाके सब्सक्राइब कर सकते हो, एंड यू कैन लिसन टू ऑल ऑफ दीज रिव्यूज एट योर ओन लेजर. विशाल वहां पे डला हुआ है, एंड ये वाला जो सेशन है ये हम रिकॉर्ड करके tonight we'll put it on YouTube. So over to you, Tanmay.
I think on Vishal, I'm quite bullish. I'll post my review like maybe like 1 hour or half hour from here. So for me, it's an apply for even for listing and thing, even for long term, it's an apply. Valuations are very, what you can say, attractive to decent for me. And the anchor book was very good. Promoters, I like the Kedra Capital team and all very much. And one thing is for sure, the management like Gurinder Kapoor Saab, top class person, and I'm a person like who likes to bet on these people. So I'm not, I might not be super convinced on this retail chains, but like I'm very much convinced on this value retail chain, especially the person. So like it's a no-brainer apply for me. I'll come on IKS. So IKS is like a technology platform-based businesses, which is like a bit of sagility kind of business. You can just consider it like almost 50% of like its business is kind of a sagility business. But like on paper, it looks like an extremely rich valuation. The sagility, sagility is like roughly 700 crores PAT at 20,000 crores valuation, FY25 expected. And like this is coming at roughly like 50 times kind of. That is available at roughly 28 times. So one will say, kitna kyun zyada difference hai? But the thing is, I guess has acquired a company called Acuity recently, and there might be some more acquisitions going forward in future. So and what revenue CAGR they have, I feel that will leave some room. But it's therefore listing gains or for long term that I have to figure out by doing some calculations. So I'm not having those at that point. Like there's one more issue. Like my question on that issue is like a very simple one to everyone who is attending this session. Like just name me a company in India which has a global dominant position in any small or large sector. any company in India out of the 5,000 listed companies, I feel you won't get an answer. Is Reliance a leader? No. And HDFC is leader? No. In the IT company and the manufacturing company, one might get answer of Pidilite. That is also so kind of answer. I feel there's a one such company which has a global dominance and can get crazy multiple. So like I'm personally excited for that one. But yes, like this was a short summary of the three IPOs upcoming. And yes, there is one more or two RHPs getting filed today, tomorrow, and this one more is already announced. So like super exciting 2 weeks going forward, and even the January session.
Got it. With that, maybe we can talk about what everyone's waiting for, which is what we are planning to do. So maybe I'll start with myself. On the main board side, I'm going to apply in Vishal, and then just put a SHNI in Sai and IKS, and then probably repeat that Vishal forward, big HNI in IGI. On the SME side, I had put in Jungle Camp, which I will repeat probably. That's what I'm planning to do. This is what my idea is. But yeah, over to you, Tanmay and Rohit. What are you guys planning to do?
I am personally applying Vishal full force. The reason is very simple. The GMP might look less, and I am a person who is not a believer of GMP at that high level. I consider it a small factor to just measure the sentiment among investors for that company or that IPO or for the set of individuals like whose names are there with that IPO. So I feel Vishal getting allotment in Vishal is actually much easier, and I am happy to make 20% at a good allotment than making zero at like applying at a issue where I'm not going to get any kind of allotment. I'll surely apply Vishal. I'll apply some in Sai Life Sciences. I'm going to apply surely on Sai, but how much that I have not yet decided. MobiKwik, like the rest, what if I am left with any funds, I'll go in the retail category. Small HNI, I never apply in small HNI. It's like useless kind of thing. I guess I haven't like really went into it, but yes, I feel it can. It's looking good to apply, but not as of now. I'm yet to make a final decision. The fifth one, I'm quite excited. So and the funds of course will get released for that one. So like that's the whole game plan, and I'll be personally skipping all this in airports just because there is a good large scale mainboard IPO which has a visibility of getting some gains surely. So I'll be skipping just because there is a enough good what we can say alternative available. All the SMEs I'll be skipping.
My view is I will be going with Vishal. I mean, Vishal is the no-brainer. I would say between Vishal, Sai Life Sciences, and I know we have not covered this company which is coming on Monday, but there's this SME called Yash High Voltage. I think these are the three most exciting ones for me. I think IGI, the good thing is it will anyway take the funds from Vishal, which probably everyone is going to apply. So that's sort of a 1:1. So for me, these are the three priorities. So figure out how to divide the money here, and then whatever is left over, I'm just doing like retail in Jungle Camp and retail in Purple United and small HNI in MobiKwik. Like that is my thinking. And whatever funds I have that I can apply, whether it is the large, HNI portions for an SME or just the BHNI, that will all go into these three companies. And
So
Inventurous, I don't know. Yeah, I haven't studied it. So I'm not decided whether I will have to keep some funds for that or not.
yeah, same thing for me as well. Haven't studied IKS, but would we unanimously say that Vishal would be the first priority and MobiKwik would be the last priority in in mainboard IPOs?
For me, it goes like the similar. Like top one is Vishal and the last one is MobiKwik. Yes, I feel some can just jumble Sai and MobiKwik together, but what I feel is like getting allotment in Sai is lot much, and I'm even happy with if it lists at 5% than getting nothing. So like for me, MobiKwik will be at last. This if I'm left with some funds, I'll apply that too, just for purely for listing.
Agreed. I think if MobiKwik gives a 40% gain, but it oversubscribes 40 times in Big HNI, while Sai can give 10% gain subscribing like 2x in Big HNI, your risk reward is far better in Sai. So, and anchor book quality is very good. So I don't see a negative chance. I think there's a chance of a decent gain. There's no point in putting money and hoping. Like if you hope, actually the math is that if you're trying to play big HNI with something that is oversubscribed 40 times, per lakh that you have blocked, actually SHNI is better. Obviously the absolute probability of getting SHNI is worse, but per lakh that you're blocking, the chance of getting a 2 lakh allotment is far better in SHNI than it is in big HNI. So I agree, it's hard to get SHNI, but mathematically speaking, it is rather than blocking 10 lakh and not getting, block 2 lakh and not get, maybe you will get, who knows. So that's why I still keep an option for SHNI. Once in a while you get lucky. But yeah, definitely not more than SHNI for Mobikwik. There's no point.
Got it. So maybe with that, it's been a 1.5 hour of marathon space. We have kind of covered everything. We'll be back next week. We'll talk about a few more companies. We'll talk about IKS, which will close. We'll talk about IGI, International Gemological Institute. We'll probably talk about Transrail. Will Transrail close next week? No, Transrail won't close. So we won't be talking about Transrail. Again, please, like, Transrail closes on Monday, next to next Monday. So we'll come back on Transrail, but we'll be talking about IKS, IGI, and then on the SME side, we have Yash High Voltage, which is a very heavily tracked IPO. On the TND side, and then two very, very small IPOs of 10 CR each, Hams Bio and NAGDAC Infrastructure. So that's the plan for next week, which is just this Sunday. It's already Wednesday. So we should be back soon. Until then, we'll put the YouTube video, we'll put the space in a YouTube video. Do follow Tanmay, Rohit, and me, and we'll be back. Thank you so much, guys, for joining.
Thanks, everyone.